All right, what's going on, everybody? It's Mitch here, and this is my first market update video in about 2 years. So let's jump into an outline about what we're going to cover. Okay, so first off, we're going to quickly go over the last 2 years in 60 seconds. We're going to go over a high level market view of what's going on out there right now. And we're going to cover the local real estate stats. Going to go in depth on some of the classic stuff, the price, the months of inventory, what's shifting in the fall so far, because there definitely is lots of things happening right now. And then just go into some boots on the ground anecdotes with what we're hearing and seeing out there. So let's get into it. Okay, 60 seconds at a glance, the last 2 years. I'm not going to go into all these items in detail. Safe to say, I'm going to do another full video on this because I've tried to shoot this video once where I hit quickly on each of these points, and this part quickly expanded into 4 minutes. So let's just whip through secondary suites, 30-day course creator, new home builds, Canadian real estate investor podcast, Cole Gordon, and then new baby, move, taking on new clients as of August 2024. And that brings us to here. Let's jump to the next slide. Learnings. I'm not going to go into this. Let's save the entire thing about what I've learned over the last 2 years in all the sort of different ventures and avenues I've gone down for an entirely other video if anybody cares to watch it. And let's keep moving. Big announcement is that I am open for business. I have formally been taking on new clients since August of 2024. Of course, I've still been continuing to process family and friends throughout the last couple of years where I, had a large portion of my focus on other things. But I am, as of really this moment in time, fully back open for business and taking on new clients. So there's going to be a link below where you can book an appointment with me directly. You can reach out on my social media. And I'm going to, my current intent is to publish this market update regularly again, once a month. So if you want to subscribe either here on YouTube or get a regular email, there's going to be a button or a link for that down below as well. And it might open just a flat out consulting option for anybody who wants to talk about something and they don't feel like they're an imminent buyer or seller and they just want to chat real estate. Yeah. And then I will hope to put out that what I've been up to video coming out soon. Okay, high level. What's going on in the real estate and the macroeconomic world? The future is uncertain, to say the least. There is, greatly opposing forces pulling in two directions. Namely, of course, everybody is aware, yes, that rate cuts have been coming and seemingly will continue to come fast and furious. As we speak, the Bank of Canada overnight lending rate just went down by another 50 basis points. Whereas, some people may think this is bullish for the market or that real estate's going to rocket off again next year. A lot of people tried to front run that last year, get in front of the rate cuts, and they were a little bit of a false start because, of course, we are battling the headwinds of, record household debt to income levels, the renewal wall. As high as 20% of all ultra low interest rate mortgages are renewing in Q1 of 2025, just a massive stat. And then they continue right on through 25, 26. People that are at sub 2% interest rates rolling over at, anywhere between 3.5% to 5%, depending on fixed, variable, term, etc. And then, of course, immigration. There's been a lot of pressure on immigration policy where both non-permanent residents and permanent resident targets are likely to decrease in the near future. So a little bit of a recalculating of expectations about population growth and how many new housing units we need to meet new population demand. A quick note on the renewal wall, even if people don't go into flat out outright foreclosure or power of sale based on this, of course, people are going to fight tooth and nail to drop everything else before they drop and miss their mortgage payment. Arguably, people's payments going up by, in the between 20 to 40%, depending on the use case, is going to extract a lot of money out of the greater economy. So the Canadian Tires, the Walmarts, even the fast food, just about anything that's discretionary spending is going to have money extracted from it and reallocated back towards housing payments, which is going to hurt the economy at large, arguably hurt employment. And then with all of the rate cutting going on and the optimism there, unemployment and ongoing employment issues and productivity issues could really plague the amount of new listings to sales ongoing. So with all that being said, base case for this year is kind of a flat year, but we'll get into that more in a second. Okay. Market minute at a glance. What you're going to see here right away is that October or November was a busier month this year versus last year. And the quick thing you're going to grab right away is the price here. Average price last year 646. Average price this year 581. That's you get some sticker shock right there, which I'm going to give you more context on in a minute. And what I'm going to say is not as bad as it looks, but definitely this price being below a 6 is relevant and significant. Average days on market being 28 days is worth note. It's simply saying, hey, if you're a buyer out there right now and a house has been on for less than 30 days, odds are you've got some time. You don't have to start the car and rush out down the fire pole to go look at this place. And if you are a seller, you're mentally buttoning down and preparing that the first couple of weeks on market, yeah, you're going to get some leads, but you're not necessarily expecting to see an offer right away, unless you know that you potentially price below fair market to try and trigger a quick sale, because that was your direct intention. Moving on here, this is a great chart, lots to pick apart here. Don't get overwhelmed. I'm going to go piece by piece through several items on this one. So first off, 98% list to sale price ratio in the city of Peterborough in November. This is indicative of what's going on out there. Almost every listing, buyers are coming in, they're uncontested. You're not getting multiple offers in 9 out of 10 scenarios. Like I said, unless it's something that's priced below 500,000 and it's priced well and it was meant to move, and someone priced that low because they're on a sale buyer's property condition on something they already bought and they don't want to mess around. Other than that, 98% list to sale price ratio. Most people are listing their prices, fairly, but adding that buffer, and these discussions are happening around the listing table with new listings coming on. You might say, hey, we know this home is worth $650, but we're going to put it on at $670 because we know someone's going to take their pound of flesh, because we're going to sit for 30 days. They're going to come in uncontested. They're going to have every condition in the book, and both sides are going to want to feel like they got something here. No one's willing to pay full price in this market until there's a little bit more pressure where there's multiple people circling to buy at once. So this is just the reality of it. People are taking 2% knock on their list price consistently. Now, let's go through this chart here. Let's start with pricing. Average sale price here. When we look last year, you're going to see, this is 2023, heading into the winter like we are right now. If we start over here where you've got sort of you're hopping around 560, 646. So first of all, remember that 646 to 581 number this year where it seems like there's this massive, call it, nearly like 70K difference between these months year over year. When you flip back and look at October of 23, and their sales were quite slow here, and it was 560, and then it's 646. Now October was a bit of an outlier, whereas this whole segment of the year was trending more in like the low sixes. And whereas this year is trending a little bit below the 6, this number is not as drastic as it would seem, I would say. Whereas in November, when you get statistically less sales, a few big ones can really skew the stats. So call this number on like a sort of rolling average across 5-6 months back as closer to the low sixes. And then this number here, when you take a bit of a rolling average as closer to, high fives, low sixes. It's not as drastic as it seems, but nonetheless, prices are definitely down this year. So no mistake in that. Also of importance is that when you see this year average sale price in 2024, you see that we're above basically the market peaks. We get this early spring market in February where the snow kind of comes off, sun's up, people are willing to drive the 115 from Durham region, and there's not a lot of inventory on because everybody's waiting for the spring market. There's no listings on, and boom, it just starts to catapult. Things start going into multiples all of a sudden, and then everybody comes, rushes their listing onto the market. March is hot, April's hot, the peak's in May. And then all the inventory comes on. Everybody who is holding off on the bad market of 23, everybody comes back in floods, and we get a ton of inventory coming on the market. Sales are still okay, but they don't keep up, and then prices go down, and then they recover here a little bit, and then down. We're retracing and establishing that without a doubt, the average price of real estate in Peterborough is now below 600,000, and that gets confirmed 4 months over. Okay, now The next thing that's of significance here is when we look at months of inventory, you sort of see that play out exactly what I mentioned, where in February we have this early spring market. Everybody pulled off because the market was just, quite frankly, really bad. And typical winter stuff, people not trying to sell over the winter, but then everyone was anticipating the spring, so nobody's looking to come on in February. February goes crazy, and inventory is low. Stays low in March. Buying activity strong. Not enough people get their place on in time, and then it notches up, and we come up all the way. Basically, you're basically stable in August, and then 3.4 in October was the first month. The reason I'm telling you all this, months of inventory, it's how many listings are active versus how many sales in a month, and so it's sort of like, how long would it take to run out of listings? It's this barometer of how much inventory you have compared to sales. And it's very indicative of price movement and the direction of price movement. And right here, in October, for the first time all year, you see sort of a meaningful decrease in months of inventory. Whereas last year, you don't have it on this chart here, but inventory in Peterborough and the GTA just cranked up more or less right into the winter. It kept climbing through November, December. Everybody was just hanging, lingering, getting stale, and inventory just kept rising and rising, and prices kept falling, and downward price pressure. Whereas here we see, yes, it comes back up a little bit in November, but we saw really it's sort of stabilizing, and I think it's going to notch down here. Of course, in December, it's probably going to be lower again because a lot of people pulling off for the holiday. But sort of base case thesis here is that inventory is going to be somewhat, downward pressure in the spring, and I don't think it's going to be crazy, but we're going to see a flat, maybe slightly upward buoyant market there price-wise. Okay, so boots on the ground, what are we seeing? To summarize here, investing appetite is still more interest rates of recent times, and where the prices still haven't come down enough. There is a little bit of downward pressure on rents that we're seeing, and they're stabilizing at minimum. They're not continuing to rise at the rate that they were. First-time buyers are starting to have conversations. Definitely, I've helped some of them out myself recently, and it's they're sort of trying to time the bottom here because they're new market entrants. It's not like a buy sell where you're neutral. They're looking to make a new entry into the market, so they're really trying to time things correctly, all things being equal, unless they're in some extremely difficult situation where they need room because they're having a child and they want out of the parents' basement or whatever. Most people are trying to time this as best they can, and people are really seriously considering, hey, do I want to roll the dice on this thing getting away on me in the spring? And a lot of people are just cashing their chips and saying, yeah, I think this is as close to the bottom as I'm going to see it based on interest rate policy, so I'm going for it. So we're starting to see that happen. And then people are getting worried about renewals. On the flip side, I'm seeing existing homeowners that are trying to shuffle the cards around to move their mortgage from an $800,000 mortgage down to a $600,000 mortgage if they can accommodate it, to extract some of that cash because they don't have enough equity in their home to do a refi, pull out equity, and float their inability to keep up with their heightened mortgage payment as rates have risen here. So definitely pressure there. And like we said before, in some cases, yes, power of sales are going up, and we're seeing people flat out be overcome by this pressure and listing their home originally at a price that won't sell, and then they're eventually listing it with the bank. From there, people are actually just making moves to downsize, which is more or less placing more price pressure on the mid-price and low-price product, and it's putting downward price pressure on the high-end product because people are looking to net get out of it rather than get into it. Okay, we're gonna leave it at that. One more sort of call to action here on my own stuff is that I'm gonna leave you a link. You can click through my website. You're gonna be able to just book in, I believe it's either 15 or 20-minute call directly with me if you're looking to buy or sell. Really ramping up to get on board with who's looking to do anything in the new year and in the spring. So I'll look forward to chatting with you, and gonna look forward to connecting again here on YouTube and Instagram. So that's it for now. We'll talk to everybody soon. Take care.